Almost everyone has at least one relationship with one financial institution. Practically all businesses, regardless of industry, require financial services at some point in time, be it credit cards, bank and time deposits, loans, insurance, or investments. But financials go beyond these. It evolves through technology, and rapid innovation has given birth to a long-term trend called fintech or financial technology. Fintech is a powerful trend. Electronic payments are steadily growing with a lot of room to grow exponentially. On top of this, we also have the rise of cryptocurrency and other blockchain technologies. With the Atram Global Financials Feeder Fund, investors can participate in growth of companies around the world that are involved with providing financial services. The fund gives you access and diversification to global financial names that we normally do not have locally. The fund also invests in fintech, which a normal financials fund would not. Invest in the biggest global companies in the financial industry. Participate in the global recovery. Diversify your investment portfolio by investing in this fund. Invest in the Atram Global Financials Feeder Fund. For more information, visit www.atram.com.ph.
The world around us is ever-changing. We are facing development challenges on a global scale. Today, 41 million out of 57 million deaths are attributable to non-communicable diseases. In the Philippines, 5 out of 10 families were deprived of basic education. The Philippines also ranked 3rd in the top 10 countries with the most natural disasters. Women participation in the labor force is less than half at 48%, while male participation is at 77%. The United Nations identified and adopted 17 Sustainable Development Goals or SDGs to address the challenges faced by economies, societies, and the environment. We at Atram support the UN and the SDGs by launching the Atram Philippine Sustainable Development and Growth Fund. The fund is designed to invest in Philippine companies that score high in terms of the integration of UN SDGs into their operations and strategy. Through this fund, we hope to encourage PSC-listed companies to integrate UN SDGs into their businesses. We must work together to make a world a better place. Atram Philippine Sustainable Development and Growth Fund. Invest in a sustainable future together. Invest to thrive. Invest together. For more information, visit www.atram.com.ph.
Hello and good morning, everyone. We'd like to thank you all for joining this week's episode of Atram webinar series. Allow me to formally introduce myself. I am JP Chong, Business Development Manager, and I will be your host for today. Today, we'll be having an interesting discussion on key insights on market trends, opportunities, and outlook for the last quarter of 2021. This session will help shape your investment decisions either individually or your respective business organizations. If you have any questions, you may send them as early as now by clicking on the Q&A button found below your screen. Before we begin, I'd like to let you know that this session will be recorded. The copies will be disseminated and posted on all our social media platforms. Also, please don't forget to visit our website, that's www.atram.com.ph, for a more detailed information about all the funds that we offer. We're excited to announce our upcoming Finspire event, happening on December 4, 2021. Finspire will be the Philippines' largest interactive online investment convention that will provide a unique platform to gain strategic knowledge about investing and finance. The conference will focus on promoting sound investing principles and highlight the best investment opportunities while creating an avenue for both newbies and seasoned investors. This is for us to meet and learn from entrepreneurs and business leaders. You may register and buy your tickets at www.finspiresummit2021.com. For more information, you may follow Finspire's social media pages by scanning the QR code found on your screen. We hope to see you all there. We'd like to invite you all to join Atram's official Viber community group, that's #AtramPH community, to stay updated on the latest announcements, advisories, and reminders. You may do so by scanning the QR code or visit the link on your screen and get a chance to win Atram merchandise. We'd like this webinar to be as interactive as possible, so please do not hesitate to send in your questions in the Q&A tab all throughout the webinar. Each question you send is a raffle entry for a chance to win limited Atram merchandise. Winners will be announced at the end of the webinar, so make sure to stay tuned until the end. We'll also be wrapping up with a quick feedback survey after this webinar. We do hope you can share your thoughts with us about our session and how we can further improve our webinar series. With those out of the way, let me briefly introduce our speaker for this morning. Our speaker is Atram's Chief Investment Officer, Mr. Phillip Hagedorn. Phil has 28 years of experience in equities and asset management. He oversees the investments team here in Atram, spanning the roles of portfolio managers, analysts, and dealers across different asset classes. Now, let us all welcome Phil. Hi, Phil. How are you?
Morning, JP. Good to see you.
Good to
How's
see you.
everything?
Everything is well and good. Safely here in my place in Makati. How about you, Phil? How are you?
We're here. I'm here at our offices today at Rockwell. So
That's good.
looks like traffic was a normal traffic, heading back to busy roads and hopefully more movement around.
Yeah, actually lately I noticed that traffic has been really coming back since the previous lockdowns that we have. Yeah.
Yeah, well, I mean, we'll show some data that shows that in a few minutes. So look forward to sharing this information with everybody. So JP, thanks, and I'll take it from here. Good morning, everyone. Thank you for joining us today. We want to share our views, no, on where we think things will go for markets in particular as we move into the next to 2022. No? And just to start things off, let's just have a quick look at different equity markets around the world, including the Philippines, and how markets have performed. I think the simple explanation for this year has been that the developed markets, the US in particular, has done very well. The S&P is up something like 17%, but it did peak sometime in September, and seeing some consolidation and corrections now, close to their all-time high levels. No? For emerging markets, the story has not been the same. We've seen emerging markets go into negative territory in September for the year-to-date period. And maybe this has been influenced primarily by China, who has seen a big sell-off in their markets on different regulatory and issues on their property companies' concerns. The Philippine market did start off as the underperformer of the year. You can see in the first half of the year underperforming everybody, but since around May, we've had the market improving, and as we now know, peaking into positive territory for the year to date. So this kind of paints the picture of how equity markets have done so far this year. The next slide is more for the fixed income markets, and particularly the US 10 and 30 year. So US Treasuries, if you want to lend money to the United States of America for 10 years, they will today pay you an interest rate of 1.6% for the next 10 years, and then give you your capital back. It seems low, it is low, but it's been lower, as you can see in 2020 and parts of 2021, we saw interest rates below 1% for the 10-year. But also not to forget, in the pre-COVID levels, you saw interest rates in the US, particularly the 10-year, trading somewhere around the 2.5% level. And as things normalize, it looks like interest rates are starting to normalize as well, moving back towards those pre-pandemic levels. Although, of course, growth is much less today. In the Philippine context, the next slide is, you can see the shape looks very much the same. It's just the interest rate is very different. No? For the 10-year Philippine paper, if you lend money to the Philippine government for 10 years, they'll pay you today an interest rate of around 4.5%. So significantly higher than the dollar, as would be expected. As a matter of fact, a little bit over what the normal spread between peso and dollar rates are at the moment. No? So, but I guess I want to point out that the shape of the curves are the same, that the interest rates are moving higher from where they bottomed off last year. And for guidance, I guess we can look at pre-pandemic levels as potentially where they can move towards, assuming normal conditions begin to put themselves forward. No? So that's a short picture. Equity markets generally fixed with positive returns from the developed markets and neutral or negative to slight returns for emerging markets. And interest rates bottoming out last year and on their way up. And it remains to be seen if we see them go much higher than where they are today. So that's a quick peek. Today, I'll be focusing really on the Philippines, as we know. We'll talk first on the macro outlook of the country. And then we'll look at the Philippine fixed income, but I'll spend very little time there because I think this chart tells it all. And where I want to spend more time on is really the Philippine equity outlook, because I think this is the opportunity that we're going to see. If you look at the next slide, when you look at global themes, we're looking at, and these themes, you can include the Philippines in these themes because I think they very much reflect what we expect to see. First, that inflation will be elevated as we open up economies and as bottlenecks that were closed begin to open. We will expect very volatile inflation and it settling really at the higher end of our comfort zone, but within the comfort zone. I think it's important to say that. Second is that economic growth will be above trend still. In the developed world, it's been there, but in the Philippines, we know we're just starting to recover. And so we would expect, at least from our point of view, we're quite optimistic about where GDP growth will be next year, and I'll touch on that in a second. And then because of what's happened, COVID and the pandemic that we've been in, what are some structural trends that have emerged that might change long-term growth prospects that could be transformational? And this is a theme that I think it's not just evident in the Philippines, but globally as well. So if you look at the next slide, and like I said, these themes will carry to the Philippines. This is a bit of a daunting slide, a bit something to talk about, but it shows you all of those asset classes that I talked about earlier. Philippine fixed income, Philippine equities, Asian or emerging markets, and global markets on the fixed income. So I just want to point out a few things. If you look at the first year, which was 2009, this is the performance and the best to worst in ranking from all of these asset classes that we're monitoring. And if you look at 2009, not only is it the first year in this chart, but it's the best year by far. If you look at that year, you had the best performing asset class being Asian equities at 68% return. Philippine equities was not far behind at 63%. And the worst performing asset class was delivering positive returns still, with Asian fixed income at around 2.7% and US fixed income at 5.9%. So that is a spectacular year where every single asset class gives you very good returns. On the other side of the coin, there's always two sides of the coin, is 2018, which really was a pretty terrible year when you look at it. Not one single asset class giving you better than 0% return in 2018. We may have forgotten that, but that's really the facts. US fixed income was the best performing asset class, delivering you 0. And Asian equities was the worst performing asset class with minus 16%. I want to train your eyes to the dark blue Philippine equity box, which has been all over the place, but more particularly in the last 5 years, it has been among the worst performing asset classes, if not the worst, across the asset classes we monitor. And we were expecting 2019 to set the stage for a very good 2020, actually, because we had strong earnings, etc., and then the pandemic hit. And the result was the worst performer in all of these asset classes last year for Philippine equities. I think things will change for this particular asset class, and I will hopefully share why we think so in the next few minutes. No? So next slide, we'll go into macro. And we'll start off with really what is driving our outlook. And driving our outlook is all about mobility. Because the reason we're in this pandemic and in this crisis in terms of the economy, and I've said this before, is because of a policy called quarantine. And as we lift the policy, we would hope that the economy can get back on its feet quicker than what I think the general folks believe, because our outlook is quite optimistic, I would say, versus others. But we're optimistic because we've seen in the past what's happened and how quickly mobility has come back when given the chance. And we've seen even the drop. So when you look at these charts, you're seeing retail. So obviously that's the mall business and how that's coming back. It hit a low in around May of this year. But even the recent lockdown in August was not as bad as it was in May. When you look at parks and recreation, and these are open spaces. This could be, for example, the open spaces in BGC between the malls. No? There is significant recovery very quickly there. And that will help small retailers and small businesses get back on their feet. The groceries have always been full. There's really been very little drop. I mean, early in 2020 it happened, but foot traffic towards groceries remained the same. And what needs to catch up is transit. And that's really public transportation. We know that's still very far behind where it should be, but as we open up, we would expect that to improve. So if you look at the next slide, I think just the important thing is to show how, our recovery today, or where we are today, is actually above, if not, very close to, if not above, where we are during the best movement periods of late last year and early this year. And the recovery has been very quick. So we hope this continues. Why we think it will is on the next few slides. Let's talk about COVID quickly, and we focus on a few things that we think are integral to calling a quarantine or increasing quarantine levels, beginning with the bed capacity. And we've seen how the bed capacity has dropped off significantly recently, both in the Philippines and in the NCR. The ICU capacity has also improved significantly, both in the Philippines and NCR. So this gives us a good chance that going into any lockdown anytime soon is not likely. Next slide, please. Again, monitoring deaths both in the NCR and outside is something we've been doing. And again, thankfully, we're seeing these lower rates as well. Next slide, please. We talked vaccination, and that's the reason we're optimistic, is we're seeing more and more vaccinations coming through. I believe in October, we've had 20 million vaccines arrive in the country, probably the strongest arrival month yet. And we expect that for November and December, we'll see about the same. And this will certainly push the NCR into very close to that herd immunity target early next year, and hopefully for the rest of the Philippines by the end of 2022. But certainly the rate of vaccinations is improving, and most importantly, the arrivals is happening in a bigger way as well. Next slide, please. So we have created our own little COVID indicator, and it is in the best position we've seen since we've started monitoring this in July last year. And so we're hopeful that this opening up will continue, and we'll have a very active next 2-3 months. Next slide, please. So this leads us to our economic growth factor, and we're looking at GDP growth next year. Well, let's talk about this year first. No, we're hoping to end at around 5.6%. I think we are on target for this at the moment. It's all about mobility assumptions and how mobility assumptions have changed through the year. Consumption has been healthy, primarily fueled by the OFW remittances still. And manufacturing has remained open. So folks in those jobs have been able to work. And that's supporting the consumption growth that we've seen so far this year. Infra spending is starting again. I mean, this is going to be the big ticket item for next year, not so much for this last year. But for next year, we expect infra spending and, of course, the elections to be a factor as we move into 2022 and the second half of 2022. So we're going to look at growth across areas of household consumption, investments, and government spending, exports and imports as we open up the economy. And we believe this is going to lead us to about an 8% GDP growth number for 2022. Next slide. Again, just focusing on OFW remittances, we see the strength there. This was a big concern last year, whether this would fall off, but it has not. And that will continue to support consumption. One thing we have that we didn't have in many crises, even back in 2009, when we were coming out of the global financial crisis, our reserves are well over $100 billion today. And that is going to help us through this crisis as well. It'll help against any strong volatility in the currency. And it has helped in that last year, there was, or even this year, very little demand for dollars. And this has kept things fairly stable. If we look at the next slide, obviously, two things to watch out for will be crude oil prices. We're seeing that moving up. Pump prices are screaming higher in the gas stations already. So that's likely to hit inflation a bit, and we're expecting that. But that's something that we're watching. We don't think it's also going to get out of control. And the other is the current account position. And why we're watching this really is this is where dollar demand comes. No? I mean, if you'll see in a normal year pre-pandemic, we're running quite a big current account deficit because the demand for dollars is high. We're importing a lot of goods. Last year, you can see we went to a surplus there on the right side of the chart. And that's because there was no demand for dollars, really. Very little import-export activity. And now that's starting to pick up again. And that we think is good news. So we would expect the current account to remain in deficit and even grow as the economy gets back on its feet. Next slide. So inflation, we said we would expect it higher. You know, the band that the BSP is comfortable with is 2 to 4%. And we think we're going to be hugging that top end of the range. No? We're looking at around 4%, 3.6% inflation on average next year. So it could start higher than 4% and work its way down towards the end of next year. But we do expect it to be quite volatile through the next few months in particular. No? We are expecting the peso to depreciate closer to 52 by next year, by the end of next year, ending this year at above 51, around the 51.30 level is our expectation. We don't expect much movement from BSP policy, just 25 basis points and another 25 basis points from the Fed. But again, I think we have to, this could be probably a shorter term outlook. Looking at what happens with growth and what happens with inflation is something we have to watch out for. But currently, these are our expectations. No? So inflation volatile. You can expect commodity prices to be up and down, which makes basket items very vulnerable. So we would expect that As I said, the inflation number to be quite volatile and on the high end of the range. And hoping that we'll see this demand for dollars pick up as we open up the economy and start the imports again. Next slide, please. Okay, one thing we want to set straight is that the Philippines is, in our view, in no risk of any default or any credit downgrade at the moment. The credit default swaps, which normally will signal something like this, is not signaling any stress at the moment. So I think we can be quite comfortable that the Philippine credit is looking stable, and as long as we continue to open up the economy, we wouldn't expect any change in that outlook moving forward. I want to touch on our market. Next slide, I think. We'll touch on Philippine fixed income first because I just have one slide for this. And the basic story here is that rates are likely to stay close to where they are. Very, very low scope for moving higher, especially in the long end of the range. Because like I said earlier, our 10-year is over 300 basis points spread versus the US dollar 10-year. And, the historical range has been around 200 basis points. So reverting to the mean is what we're expecting over the longer term. And that being the case, the question then where the spread is today is what is most likely to happen? The long end coming down in our side or US rates moving closer to where we are? And we think it's the long end softening a little bit or moving downward. No? We're looking at that. We're positioned for that. We expect the BSP to see inflation at a higher level, but not be reacting too aggressively to it. But overall, the tendency would be for Philippine long-term rates, the 10-year in particular, to hold its line, if not move slightly down or lower. And so we think the risk of rates moving much higher from where they are today is low. We do expect the short end of the curve maybe to move higher, slightly higher, but that's within the 25 basis point adjustment expected. No? So next slide is about investments. No? And one thing we've seen significant outflows from foreign investors from the stock market for the last 2 years. But I am happy to point out that in September, we saw our first year of inflows into the stock market, first month of inflows into the stock market. And in October, so far, we have 2 more trading days left, but it's a net inflow month again from the foreign investors. So that's a good sign, number one. 2, the foreign investors are directly investing in the country. As a matter of fact, the levels are above what they were in 2019 as of June. So we are seeing foreign direct investment coming in. The next slide will show it's mostly still focused on the manufacturing front. But they're investing in electricity and gas and steam, in financial and insurance activities. So we are seeing foreign investors come in, and now it's starting to come into the stock market as well. And the reason could be the next slide, right? If you look at the next slide, how do we compare versus our neighbors? Fair. We're not expensive, we're not cheap, we're kind of middle ground. But when you look at GDP growth, for example, forecast for next year, and this is the Bloomberg forecast, this is not Atram. As you know, we have a more optimistic outlook than the Bloomberg consensus. But the Bloomberg consensus has us at 6.3% next year. No? So quite strong growth, second strongest in the region. From a vaccination standpoint, we're far behind Malaysia, but we're within the ballpark of our other peers and slowly moving higher, hopefully more aggressively in the next 3 months. From an earnings growth standpoint, I can tell you our outlook for next year is way more aggressive than this. But this is still a significantly, it's significant because it's stronger than any other earnings growth rebound that we're seeing in other countries as far as the outlook is concerned. And finally, on valuation, we're not expensive. 16 times 2022 multiple. That's a significant discount from our 10-year average, which has been closer to 20%. So, lots of reason to be optimistic about our market over the next 12 to 18 months. Next slide, please. So we're going to talk earnings, and we believe the market will rebound on the back of earnings. And I'll just go straight to the forecast. Our year-end forecast for this year is around 7,600, based on where earnings are, and the third quarter earnings are being talked about today. They're being released as we speak these next few weeks, and we will see if we're on track for this 30% earnings growth that we expect for this year. As of the first half of the year, we were online for that. Next year, we're expecting close to 43% earnings growth. And if we revert back to around a 19 times multiple, the market should be at the mid 8,000 level by the end of 2022 or sometime in 2022. So another reason why we're quite optimistic is these sectors. We'll focus on a few of them only today. I don't have the time to talk about every one, but I'll be talking primarily about the property sector, infrastructure, the new economy, financials, and the power and utilities. These are sectors that I think are critical, and they're a huge part of the PSEI. So if these sectors do as we expect them to do in terms of earnings, etc., then the 8,600 target should be a very fair target for next year. So let's get into some of the sectors here, starting off with property or banking. I think we'll start with the banking sector first. Just two things to look at. I mean, there's a lot to talk about with banks, but first of all, they're very cheap. What do we mean by cheap? When we look at banks, we're looking at them against book value, and the price of their stock versus book value today is not asking for significant premiums. Okay, some major banks are even below book value today. And the reason for that was there was a lot of concern about the NPL ratio. What's the NPL ratio? Non-performing loans. These are loans that people will give up or that they cannot pay because of whatever situation. And obviously the pandemic put the fear into the banks that this number was going to spike. Back in the Asian financial crisis, the spike went as high as 19%, I believe, was the peak. So today, the fear was that we would see around 9% last year. That's what we thought. But the reality is we're at around 4.6%. And for some of the large blue chip conglomerate, the large banks, the largest in the country, the number is about half of this only. So it seems like the NPL ratio is very much under control. The second thing to look at is, will the banks start to lend again? Because as you saw last year, sorry, if you go back to that previous slide, the chart on the right, loan growth was peaking somewhere around 20% early in 2020, 10%, sorry, and it quickly dropped all through last year to where it became negative. And, I think that's expected. The banks decided to hold off because of the pandemic. But the good news is they're starting to lend again, and that's important. And that's, I think, going to give us an idea that the growth can come back and earnings can come back for the banks. But let's not be fooled. I mean, the banks, I think a couple of banks reported earnings already for third quarter, and the number is in the teens of billions of pesos in income. So, I think banks are quite healthy and quite strong to move forward. So because the banks are there, they're going to start lending, and what an area that they lend to aggressively is the mortgage side and houses. So we'll move to the property sector quickly. And we'll start with residential because that's the key part of the sector. That's what drives earnings really in a big way, property development. And one, we are seeing vacancies move higher. Manila Bay has been the worst hit, where vacancies are up close to 11%. And prices have dropped, but the decline has been arrested. That's what we're seeing. So we saw anywhere from a 5 to 20% drop in prices, but they're now holding. And so it looks like, we're careful to say recovery, but bottoming out seems to be the right term. That the property sector seems to have bottomed out from the property, personal residential side of things. No? Next slide. On the office space, this is where I think vacancies will remain elevated. No? You have a huge exit of the POGO sector, which continues to happen. And we know that that was a big draw. And I think, what we're also seeing is movement. So, there's an opportunity to maybe relocate your offices to better locations, more central locations, newer buildings, which is causing a lot of vacancies in the older buildings. And so I think that's a trend that we will probably see continue as we move along here. But there is traditional office demand picking up, and BPO demand as well. There's more BPO demand coming in, which is a nice new factor, I think, again, that we didn't expect to see as aggressively. So property sector for office, again, the vacancies will remain. The new buildings will have an advantage over old buildings. And obviously, renegotiation of leases is likely to be a big part. Huh? Next slide. Really, the area that's going to come back is going to be the malls. No? The malls have been basically zero. They haven't contributed to earnings at all. So if you expect earnings growth to come back, it's got to be driven by the malls coming back. For some property developers, more than 50% of earnings depends on this. And you can see that percent of spaces reopened is starting to creep into the 70% level. The foot traffic is still under 50%, but if those mobility data is something to lean on, then I think we'll see those numbers improve very quickly. And sales as well are still half of what they used to be. But that means that there's potentially a significant upside for this next year. So that's good that we have a low base for the mall areas and mall sector. And as the vaccination rates increase, as quarantine levels decrease, we will see a comeback in the malls, and that will contribute to earnings of property companies next year, which they have not contributed at all this year. Finally, the last sector is the tourism sector of property, and obviously this is very related to vaccinations and mobility. So the last slide on property is about hotels, and again, it's the last sector to come back. But because of the very low base, we think the growth will be high next year compared to what it was in 2020. Second. So next slides, we'll talk about some other sectors. Construction, I think, infra spending will be at an all-time high in the next 2 years. There are projects that are live. Now, this is not something we never had in the Asian financial crisis. We did not have post-global financial crisis. But today we have this, and we have these projects in line. and we think it's going to be a big lift to jobs and to spending. So that's something that we're seeing. Next slide talks a little bit about the order books. Oh no, sorry, this is the power sector. So the power sector looks interesting because there's very little new power coming online. You can see the charts, no? If you can see the charts, Luzon, from a total countrywide perspective, we have enough power all the way until 2026, where we're seeing that we're going to start eating into a little bit of potentially our reserves, no? And Luzon is the most stable of all. Mindanao, probably an oversupply right now of capacity. Their demand is still quite low. Their reserves are adequate. So there's enough power supply in Mindanao. It's the Visayas that is a concern. And obviously, that's where investment needs to be made. So, we're looking at investments more in renewables. That seems to be the trend across all power companies, and more private sector investment. And I think when you look at FDI, there's been significant investment in the power sector from foreign investors in the last few months in this sector. So I think you'll see that continue over the next few years. Another sector is the changes, the trendsetters that we're seeing. How do we invest in these areas? Whether it's online platforms that are so popular now, that have become exploded during this pandemic. The next slide shows you really the e-commerce opportunities. Pure Gold and Robinson's Retail, Wilcon and Home are all moving to set up. E-commerce sales have grown significantly since the start of 2020, and they made up a very small percentage only, but we think it's going to grow significantly over time. So that's a great opportunity to look at. The next opportunity is really on the back of connectivity at home, broadband, right? People want stronger connectivity at home. They have now more choices to make and faster connection. And so, this is a space that's being fought very aggressively and growing very aggressively as well. Finally, in the fintech side, so the last bit, where we're seeing GCash and PayMaya really emerge as standalone businesses for the two telcos that own them. Not just standalone, but significant value being brought by these two businesses, and how we invest and obviously participate in that is something we continue to look for. Next slide, please. And finally, the elections. We've talked about this slide before, but obviously for me, elections have always been a positive. And even the one we have coming, I think, again, it's going to be a very active campaign, very unique campaign. Hopefully we'll learn more about all of these presidentiables and what their focuses are and what they want to do for the country. But I think elections have always been a positive impact, at least in the short term. And you have this honeymoon period where, if you're not happy with the results of the elections, people can use the honeymoon period to divest from markets, I guess. But generally, elections are quite positive for the Philippine environment. I think that's my last slide. Is that it? I think we have a quick summary. So just to wrap this all up before we open up for questions, we're watching inflation as we recover, as the globe opens up, as economies open up. This is likely to be very volatile, but not likely to get out of control. That's our expectation. Equities. That's what we're pushing right now. It is a long-term hedge. It's where growth will be. And we think Philippine equities in particular is going to be an area that will deliver, in my personal opinion, the higher, hopefully be in the higher end of those return expectations or returns for 2022. Our election forecasts, I said, are a bit optimistic, but as you saw in the Bloomberg forecast, 6.2%, it's still good. It's still above our 6%, sort of where we were prior to the pandemic. And so, 6% to 8% to me would be acceptable and would keep the narrative of growth in place for the Philippines. And like I said, focusing on our equity portfolios today is, I think, what we want to do. Fixed income, we're being very tactical there, where we think there might be some movement in the curve. But really, the opportunity, I believe, personally, is going to be in equities and in the Philippine equities in particular. So I wanted to just touch a bit on our strategies there. Next slide. So this is just our performance of our 3 equity funds compared to the index. And so, we have the Equity Opportunity Fund, which is slightly outperforming the benchmark today by about 1%. And this fund is invested, as you know, in large cap stocks that are generally aligned with the index. We only have less than 10% of the fund is invested in non-index stocks. So it's kind of our benchmark core portfolio, as we like to call it. The next best performer is a fund we launched in February of last year, the Philippine Sustainable Development Growth Fund. This is a fund that selects companies on the back of their adherence and support of UN Sustainable Development Goals. Of course, we put them through our own fundamental checks as we normally do, but we construct the portfolio based on this sustainability framework. And since launch, it's delivered spectacular returns, 16% since the launch in February of last year. And we think poised to continue to do well with the very little volatility it has. And of course, if you want to go to the higher risk side of the equity space, our Alpha Opportunity Fund, that does not have, well, the spirit there is to own stocks with market cap less than 150 billion pesos market cap. Today it owns a couple of index funds, stocks there, but primarily it's a small mid-cap fund that's performed extremely well this year. It's the number 1 performing equity fund in the country with returns of over 23% year to date so far. So next slide. I guess maybe that is my last slide finally. Well, I've taken up a lot of time here. I think just want to thank everybody for joining us today. We have a lot of people on the call. And just to quote Benjamin Franklin, an investment in knowledge pays the best interest. So joining us today, I hope you learned something. And I hope it pays good interest in the future for you all. Thank you for joining us, and I'll be happy to take questions. JP, back to you.
All right. Thank you very much, Phil, for an interesting and detailed presentation on the current market trends and, of course, your outlook before the year ends. But before we proceed to the Q&A portion of our webinar, we'd just like to tell everybody that Atram has a wide range of investment products, and our capabilities span across several asset classes. This is meant to service the different investment objectives of each individual. And with these, it was great pride that we announced that Atram has recently achieved 9 industry awards for 2021. Firstly, the best local fund house in the Philippines, given by Asian Investor. The fastest growing fund management company in the Philippines, given by Global Banking and Finance Awards, and by the Global Economic Awards. Next, the most innovative mutual fund offerings by the Global Economic Awards. The best investment solution provider from World Business Outlook, and the most innovative asset management company from Pan Finance Awards. We'd like to add that Atram Group and Atram Wealth received the editor's triple star from the Asset AAA Sustainable Investing Awards and the Asset AAA Private Capital Awards, respectively, for integrating ESG, that's environmental, social, and corporate governance in all our investment process. Finally, we take pride that the Atram Total Return Peso Bond Fund has been recognized by the CFA Society of the Philippines as the best managed fund of the year for Peso Medium Term FVPL valuation category. For today's session, we hope that somehow we assisted you all to hashtag take on tomorrow by investing on your hard-earned money with an award-winning fund house. All right? So again, just what Phil has mentioned at this point, we'll now move on to the live questions from our audience. We received several questions during Phil's discussion, and there are still several questions that are coming in. So to start it off, Phil, is an economic recovery under threat by the new COVID-19 variants being reported?
Well, there's going to be continued variance as we move along, right? I think that, and we even saw that the Delta variant was supposed to be the worst so far, you know. But what we noticed was that mobility movement with the Delta variant lockdown was not as bad as it was in the first lockdown we had. And so I think it's that vaccination is it's all about the weapons that we have to use against this. You know? And new variants may come out, but I think we have much more knowledge and we have more weapons to use against it at this point. So yeah, there could be still a looming crisis. There could still be lockdowns here and there. And our anticipation is we think, you know, we'll be in some sort of quarantine level, even in the first quarter of next year. But if the traffic I saw today is any indication of how people move around, you know, people are moving. So that's important.
All right. Thanks for that, Phil. Now moving on to the next question. What could be the effect in our property sector on what has been happening in China, such as the Evergrande saga, of course, also the modern land default payment in short, medium, and long term?
Well, I don't think the China property sector will have much impact on the Philippine property sector. I think our own challenges, as I pointed out, are challenges we have to deal with. First of all, the need for homes is still very high. The demand for personal homes is still very, very high in the Philippines. So the challenge is going to be the access to capital to buy that, because people have to take mortgages, right? And the banks have to lend. But there's no doubt that even, I think the pandemic has caused even more demand, because people see that maybe living in a house with your parents still, if you're a bit older, it's not, it might be comfortable, but if you have to work at home, if you need your own space, it gets difficult, right? If you were living in a small apartment and now you want to move out to, you know, the suburbs of NCR, the demand is there for that. The need not to live right next to your office anymore is bringing up demand. So, you know, that's one area that is healthy. The area that needs to recover is going to be the retail space and the malls, because they're a huge part of the property earnings and they've been missing for 2 years. So that's what we expect to deliver some growth next year.
Right.
So to answer the question directly, I don't, you know, sentiment, it's more sentiment, but I don't think it'll have much impact.
All right. Thanks for more clarity on that, Phil. Next question. This one is, it's more of a joint question, if you will. US equities have run up so much. Energy prices are also surging, and cryptocurrency interests remains very strong. What's the best approach for investors looking for income? And to follow up, given that the Philippine Phil equity returns are not currently too attractive, what mix of portfolio, may it be a local, regional, or global, would you recommend for an investment horizon of around 3 to 5 years?
Okay, so there's like 5 questions there, right?
Yes.
I don't know.
Interesting
You know,
question.
the first question is the most important question I think I got from all of that was, what's the best sources of income today? Okay, because the way I look at income is somebody that can be protecting your capital, number one, and deriving some sort of yield or income from that, right? And the challenge is that you have an interest rate environment globally that is very challenging with inflation moving higher. Interest rates themselves are very low, so even if you're willing to wait it out, like I said, the US government will pay you a princely 1.6% for the next 10 years, right? So if you're willing to wait it out, that's what you're going to get. So how do you enhance this? How do you try to add to that low base that fixed income will give you? And the only way to do that is to have a multi-asset portfolio. That's my view. You need to have a portfolio that has some equities in it, that has some fixed income in it, and that has some alternatives. And an example of alternatives on the local end would be REITs, for example, or there are products that Atram has that qualify for alternatives in our shelf. But you have to have a mix of these assets to try and protect your capital, number one, so it doesn't erode, and then at the same time be able to deliver income that would be maybe a little bit above what the governments are willing to give you today, right, where interest rates are so low. I don't think Bitcoin fits in that argument because Bitcoin is very volatile. I'm not saying it doesn't fit in your portfolio, but I think the professional managers are right now recommending a 1% exposure to Bitcoin of your wealth, right? I know the young folks might say, well, I can do more than that. And then, if you can take risk, that's absolutely okay if you can take more risk. But what we're looking at is how Bitcoin fits in an overall portfolio. You still want to follow the rule of don't put all your eggs in one basket. So I think I've answered the last one. The approach would be think about a global portfolio, think about your asset allocation globally, where the Philippines should still play a big role. So 50% of your assets should be in the Philippines still, but doesn't all have to be in one equity strategy or one fixed income strategy. You can think about that and how to spread that. And the same on the global side, and together with alternatives, you should have a very stable portfolio that can deliver returns in the mid-single digits, where your capital should be quite well protected.
All right. Thank you very much for that, Phil. I completely agree on the diversification aspect, especially you mentioned that, of course, we always tell our clients that you don't put all your eggs in one basket. Yeah. For the next question, we all know that interest rates, ABD, rate of inflation, have an inverse relationship, of course. BSP has kept interest rates low, resulting to rising inflation. But we are not seeing the economy growing. The main objective of what is the main objective of the current monetary policy? Is this something unique to the Philippines compared to our regional neighbors or even the US?
No, I mean, the question I'm getting is that there's supposed to be an inverse correlation between interest rates and the economy and markets, and our interest rates are low, but why isn't our economy growing? Is that right?
Yes.
I think first, the economy is growing. It hit a rock bottom last year, but that wasn't because of the BSP or anything. It was because of the pandemic. I think last year was one of those years where you saw this usual correlation reverse, because not only did rates go down, but so did the market, right? And we have those years happening. I pointed out in 2018, it was a similar scenario where nothing worked, right? So I think the strategy is to keep rates where they are to allow the economy to get back on its feet, right? to allow people to start borrowing and borrowing at a fair rate. And that's a proven way to. It's been proven because in the global financial crisis, that was the tactic. It was not like in the Asian financial crisis where interest rates shot through the roof and you couldn't borrow. And if you wanted to borrow, you had to borrow at 15, 18, 19%. That's not where we are today. And it's because of our foundation being stronger, fundamentals stronger, reserves higher. We have these tools. So I expect the central bank to stay firm, keep interest rates low, let the economy recover, watch inflation, because that's the tricky part, that you don't want to see inflation get out of control. And, for some areas, there's not much we can do about that, but, but that's something that we have to watch out for.
Thanks for that, Phil. The next question is an interesting one. Now that the identity of the presidential candidates are clearer, how does it affect your outlook for fiscal and monetary policy and the market direction?
Well, the candidates are clear, but they have not clarified what their fiscal or monetary policy is going to be. So I look forward to the debates. I don't, from the candidates that are out there, is there anyone that I think would be a disaster for the market? No. I don't see any socialist, communist. I don't see any of those type of candidates that are leading. I think many of the candidates are very like-minded in their capitalist thinking and open economy. And but I reserve my right to to save that answer until I learn more about each candidate. They're dynamic. There's a young group, right? That's out there fighting for this presidency. They're going to inherit a pretty challenging time, right? Where the economy is just getting back on its feet. The pandemic is still out there and needs to be dealt with. China's dynamic is also changing, right? And so it is a very challenging and interesting time, but it's also, in my view, a time of recovery. So there should be some optimism and some intent to continue to grow and invest and create jobs and get people to work and get the economy to a higher level than we ever were, which I think is and sooner than maybe we all think. But like I said, let's wait for the debates, listen to what they have to say, ask them the hard questions, and hopefully we'll get a clearer picture very soon.
I completely agree on that one. I'm also excited for the upcoming presidential debates and let's see where they will go moving forward after this. The next question, COP26 is next week. How should investors position themselves when the fever over climate change peaks?
Well, I mean, we're taking a stand, right? Atram, we feel this is very important. We've developed ESG and sustainability scoring processes. We're integrating that into our whole framework of research, how we look at companies, And to me, I've said this in the past as well, that investment people that look at companies will be looking at primarily the financials all the time. Can they make more money? Can they make more money? Can they make more money? It's always a question. And that's fine. All of us have that info. Every single analyst in every single firm with a Bloomberg will be able to tell you that. If you don't do the other research, if you don't do the ESG, the governance, the sustainability, social impact, environmental impact, if you don't do that research, you're not really learning about the company completely. And that's what we want to do. And so when we make decisions, we're well informed, not just that, hey, they've got a great product, they're a market leader, they are, the brand name is immaculate, but that they care. that's important too.
Right, Phil. Thank you very much for that answer. I think in the interest of time, I will be taking this last question. And in perfect, this is an interesting question, and I can take this one. So, hello po, magandang araw. Paano at saan po akong magsisimulang aralin ang tamang pag-i-invest sa stock market, bonds, and mutual funds? Because I don't know where to start. So I'll just take this one.
Can I do it?
Yeah, of course. I will. No worries on that
Punta
one.
kayo sa Facebook at sa YouTube. May mga video kami dyan. Aralin niyo yung mga video namin. Okay? I mean, we're trying to build as much information as possible in these sites to help you. So, JP, if you have anything to add, please do.
Of course, no worries.
I wanted
Again,
to at least make my first stab at that.
Tamang-tama po si Phil. Meron po kami mga Facebook pages, YouTube videos, and even our Viber community for you to start. But also, we would just like to announce to everybody that we will have our Finspire event come December 4 of 2021. So ano po yung Finspire event? Again, it would be the Philippines' largest interactive online investment convention. Doon po kami magpo-provide ng platform for everyone or for those who will be attending to gain strategic knowledge and about investing in finance. It's open to all, may it be newbies or seasoned investors. So again, our Finspire event will happen on December 4, 2021. And we will give more color or will provide more details on it later in our webinar session. All right. I think that ends our, and also that's all the time that we have for questions. Before we wrap up, do you have any last words, Phil?
No, again, thank you all for joining us today. I hope, again, we've been able to share with you our views and outlook. And just wish you the best. Wish you the best this coming Christmas season. Stay healthy, stay safe. And we'll be always here for you on standby as usual.
All right. Thank you very much, Phil, for your for your words, of course, and the wisdom that you have provided in our webinar series. Again, thank you, everyone. Thank you, of course, to our audience. We appreciate all of you for taking the time to join us today. We hope you were able to gain insights and key takeaways from today's webinar. But before we move on, of course, relative to my answer later, earlier about the Finspire, now that you know, in terms of the registration on how you can participate, we'll give further details on it. All right. So now, did you know that for as low as 1,000 pesos, you can already jumpstart your investment journey? Here's how you can invest in Atram funds.
Hello. To open an account with Atram, just visit our website at www.atram.com.ph. Here, you can learn more about all the funds and services that we offer. Our site will then guide you to our online investment platform, Seedbox, where you can start investing for just 1,000 pesos. But if you have more questions, visit the website's Frequently Asked Questions page or Atram Academy page. Thank you.
As promised, here are our winners for our Atram merchandise. If you have any friends who you think would like this webinar but unable to attend, feel free to share the YouTube replay session of this session and visit our YouTube channel, and that's at Atram Studio. Kindly scan the QR code to visit our official social media pages. As I've mentioned earlier during the Q&A portion, we would like to invite, and we're here to and excited to announce our upcoming Finspire event. Again, that will happen on December 4, 2021. Finspire will be the Philippines' largest interactive online investment convention that will provide a unique platform to gain strategic knowledge about investing and finance. Our Finspire, or this conference, will focus on promoting sound investing principles and highlight the best investment opportunities while creating an avenue for both newbies and seasoned investors. So sa tanong po kanina, yung saan at paano magsisimula, this event could be your starting point. All right? So for us to meet and learn from entrepreneurs and business leaders. You may register and buy your tickets at www.finspiresummit2021.com. For more information, you may follow Finspire's social media pages by scanning the QR code found on your screen. Would like to invite you to join Atram's official Viber community group, that's hashtag PHAtramPH community, to stay updated on the latest announcements, advisories, and reminders. You may do so by scanning the QR code or visit the link on your screen and get a chance to win Atram merchandise. On behalf of Atram, thank you again for your attendance and participation. We wish you and your loved ones continued health and safety. Have a great day ahead, everyone.